the stock market, what you're doing is you are going to invest some of your extra money. Again, money that you made from your job or your business that you didn't spend at Gucci, right? You take that extra money and you're going to put it into the stock market. Now, I'll go over what are the things that you can invest in, but some companies on the stock market have a lot of cash at the end of the year. They're making big profits, and then they have all this cash in their bank account. And now this company can do three things with this cash in their bank account. I want you to understand the hypotheticals. Number one is they can take this cash and save it for an emergency. We all remember when COVID happened, a lot of companies had no money left over. Well, one thing that these companies can do is save this cash for an emergency. The second thing that they can do is take this cash and reinvest it right back into the company. They can open more stores, hire more employees, invest in the software, invest in the technology. But the third thing that companies can also do is they can take this cash and give it away to the shareholders. They can just give it away to investors in the company, people like you, people like me, that own a share of these companies through what's called a dividend. A dividend is a regular quarterly payment, meaning it's paid out every 3 months that you get for doing nothing except owning the company. If you invest in a company that's paying a dividend, that means that this company is going to pay you money. They're going to deposit money directly into your brokerage account every quarter, meaning every 3 months, for you doing nothing except owning the company, because now you own a piece of the profits, and this company says that they're going to give away the profits. Not every company pays a dividend, and not everybody wants to get a dividend. Before I get into the pros and cons, let's go over how this works, and then I'll talk about how you can actually win with this strategy. So make sure you stick with me through this entire section, because I want you to understand the entire process on how you can win. The first question everybody asks here is, okay, Jaspreet, I want to get some dividends. What company should I buy? Well, there's two different routes that you can go down. You can either go out and invest in individual companies, stocks, or you can invest in funds that give you exposure to a lot of different companies. So let's start with stocks. Everybody will say, well, what stock should I buy? And it is going to be way too much for me to explain how to analyze a company, how to read the financials in this video, but let me go over the basics of how you can start. Just go to Google and search top dividend paying stocks, and this will give you a starting point on your research. Morningstar put out this article going over the 10 top dividend paying stocks, and the top 3 are number 1, Verizon, number 2, Johnson & Johnson, number 3, the Altria Group. Now, I got to give you the disclaimer. Investing has risks. You are never guaranteed to make money when you invest. In fact, you will probably lose money, which is why you need to always do your own due diligence and never, ever blindly trust a random guy on YouTube. So the 3 companies that we're going to be looking at right now are Verizon, which at the time of recording this video is paying out a 6.5% dividend. Johnson & Johnson paying out a 3.3% dividend, and Altria paying out 8.3% in dividends. Now, the way this works is if you were to go out and invest $100 into this, and this company, what that means is after the next 12 months, you would make 6.5%, meaning $6.50 in cash flow deposited into your bank account for your investment in Verizon. You would make $3.30 for your $100 investment investing in Johnson & Johnson, and you would make $8.30 investing in the Altria Group. The first thing you're going to say is, Jaspreet, that's not a lot of money. Stick with me, I'll explain how you can increase your returns. The second thing that you're going to say is, Jaspreet, okay, if this is the case, then I should invest my money here because I'm going to get the best and biggest cash flow, right? And that's not how you want to do your analysis. Now, I know I'm not going over how do you actually research a company in this video. I'll link a video on how to do that down in the description. But what you want to understand here is this is just the cash flow. What you are investing in is this. You are investing in the company. You are investing in the underlying asset. And the last thing that you want to do is make your investment decision based solely off of this, because this does not tell you necessarily the true health of the company. For example, if we take a look at the Altria Group over the last 5 years, what you'll see is that the stock is down almost 10% over the last 5 years. So sure, they're paying out this 8.3% dividend, but what you really want is a company that's growing in price and also growing in dividends. And that means you want to be investing in a good company that's growing and innovating with growing profits. And you might say, but Jaspreet, I don't know how to do that research, or I don't want to do that research. Is there a way for me to lower my risk? Because you also have the risk that you put your money in Verizon and then Verizon goes bankrupt. Now, not only did you lose your cash flow, but you also lost all the money that you invested into the company. So how do you mitigate some of that risk, especially for what I call the 98% of Americans who should not be investing in individual companies? Well, that's where we have the right side, taking a look at funds. Here are a few examples, keyword examples, not telling you what to invest in. SCHD. This is a fund created by Charles Schwab, or now known as Schwab, which invests in high dividend paying companies. And this is paying out a dividend of 3.4%. Number 2 is SPYD. This is a fund created by Spider, SPDR, which invests in dividend paying companies in the S&P 500. The S&P 500 is a group of the 500 largest companies on the stock market. So if you take a look at these 500 largest companies in the stock market, some of them pay out dividends. This is investing in those companies that are paying out dividends that are part of the S&P 500. Then you have VYMI. This is a Vanguard fund that invests in international high dividend paying companies. These are companies not in the United States that are paying out high dividends. And then you have FDVV. This is a high dividend fund created by Fidelity that's investing in dividend paying companies. Now, what does all this mean? These are funds created by different companies: Fidelity, Vanguard, Spider, Charles Schwab. All of these are different institutions. You might have heard of these in different contexts. These are institutions that create funds that then go out and invest in companies. So now when you invest in any one of these funds, you're not investing in one company like you would here. You're investing in dozens or hundreds, or in some instances even thousands of companies. That way now you can lower some of your risk, because now let's say you invest in one of these funds and a company like Verizon goes bankrupt. In this instance, if you put your money in Verizon, not only is your cash flow gone, but your investment is gone. Every dollar you invested is now zero. Here, if one of the companies in your fund goes bankrupt, well, you're still okay, because you have
If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial news
energy, making sure that the
button
company I'm investing in is a good company.
Thank you for watching, and I'll see you in the next one.